Hello, everyone. It's Andrew with the Market Mindset. I wanted to jump on early today and just talk about a few things with everybody regarding the volatility in the markets here. It's been pretty intense for people, and what we look at really is that the main factor right now affecting precious metals, and we all know it running up to 5,500 gold and pulling back down. We're around 49.17 right now with gold. Of course, silver being much more volatile as well. The biggest factor here, I would argue, is the constant and reoccurring CME raising margins. When people hear that, they're getting a couple different mechanics, maybe possibly incorrect. This really hurts exchanges, especially those that are using a lot of leverage to trade. And as we know, it's this trade, if you've been following precious metals for the last little while, has gained attention. Not as much, of course, in the stocks and the equities, but certainly people are being paying attention due to not maybe Bitcoin and crypto kind of not being as popular. Certainly, we saw Bitcoin get punished as well. But the futures contracts, when you see that those trade, you don't have to put up the full metal value. Of course, as you know, you put up a margin. That collateral allows you to control much larger positions. And we've talked about flow trading and algorithms. And once again, if you get lots of headline news and lots of interest into a space, that attracts traders. They want the action, as it should. That causes volatility. And when that volatility explodes, the CME raises margins to protect the system from defaults. Now, one could easily say that the scope and scale of the precious metals markets is not the same as others, as far as like a bond futures market and the overall market itself. But when you have to suddenly require more cash in a position, they don't have the leverage. A lot of people have to sell out. It's not an opinion. It's not a merit based in the fact that the precious metals trade is done. We don't feel that in any way. Yes, there'll be volatility, but we still see the long-term trend being very positive for both gold and silver. Did they get ahead of themselves? Yeah, they got a little ahead of themselves, but we've been talking about that for quite some time, that it could easily pull back. We don't trade commodities that way for this very reason, because yes, those could have made a ton heavy leveraged in the futures market. And if they weren't, using options or whatnot to cover themselves in case of possible chaos out of cost or for whatever reason, they're getting punished a bit. And this is what can happen. And it draws a lot of attention. It panics a lot of people, especially those in the equity side here, and especially junior explorers, because there's been lots of near starts where people think, great, the mining sector is going to take off. People are going to start pushing money into it. And people get antsy, rightfully so. A lot of people have been in this sector for a very long time. A vast majority of it kind of getting punished, very difficult. So when they see a run, it's bliss, it's ecstasy, it's very happy, but it can be punished. So it's easy to just go, listen, I'm going to sell out some of my positions. And that's a normal human reaction. It takes a ton of discipline to remain in those positions, and you have to have a level of certainty in those stocks that you own, especially a growing exploration story. If you don't spend, say, with a Rick Rule says, 10 hours, I think, per stock per month, to really understand what you're putting your money into, it's very easy to decide to sell off your equities as well. Not only did part of the volatility in the S&P as well, so your main ETFs, your main accounts, your main holdings would have gotten hit. You also got hit by the gold and the silver, and that causes a lot of stress. Not just for the traders, as I mentioned. The traders have to wire more money immediately. They might have to cut their positions. We see this volatility spike and then return. Margin gets hit, stops get hit. This happens. So our overall thought pattern on this is that, listen, precious metals, especially silver, it's a thin market. It's definitely more speculative. It doesn't get the same attention as others. Big, boring markets tend to be a bit less volatile because there's constant stream of data, long term, lots of trade volume. This has garnered attention very quickly and abruptly, and that can be a reflection in the market as well. We're very happy to see gold return once again to 4,900. And once again, that will put a bit more comfort into those that have the equity positions. And my argument, I'm going to make today quite short because it's a Friday, is you shouldn't have been selling off your equities anyway. And I'm not giving advice. I'm just saying from my own portfolio what I'm not selling them. A 4,000 gold is absolutely incredible for any mining company producing. The automatic just sell because the commodity is down. That makes sense in a way because you're saying, oh, maybe the future earnings are going to be less, but they weren't priced properly anyway. This is an unloved market. They're not getting the respect they deserve. The amount of cash flow they have at 3,500 gold is incredible. And I'm not going to complain because this market is inefficient and it isn't priced the same fundamentally as others. It just is. But that's an opportunity. And I think those people that remain less reactive to what's happening have a bigger macro long-term thesis. Once again, in the markets a bit longer, a bit more disciplined. I think we shook out a lot of newcomers that came in and thought, this is great. I'm going to move some money into this. We, of course, reach out to all sorts of new people, and we want to encourage them to get into this. And, they're getting it at a higher price, and they see a pullback, and they panic, and they go, forget it. I don't want to be involved in this. This is terrible. Once again, I get it. I absolutely get it. That's why you need to be diligent. You need to have a framework, and you need to really have a mindset and a model as to why you're in this space. And if it's just to make money, that's tough. This is a tough market to just make money in. We were drawn to it because it has all of the factors that we like to research and read about just on my own, as a hobby. I like talking about fiat currency and looking at debt and how politics works with business, how countries have to stabilize themselves in the economy and different economic points of view. So that makes the gold attractive to us. But we also have a very, very firm understanding that everything is extractive. Your industry, your energy, your defense, whatever sector you choose to look at, that all comes from extracting things from the ground. And that is where Canada has a great overall advantage over many, many other places that if we utilize would be fantastic. What we focus on here is not anything promotional. We're trying to be a little bit more boring and less exciting than many people out there, and structure ourselves as a media intelligence platform sitting on the bigger macro stories of critical metals, which means we have to talk a little bit about politics. We have to talk a little bit about logistics, and a little bit about AI and tech and all that, because it all matters. But we want to sit in between those giant macro narratives and sell-side research of data on companies. Now, of course, I don't work at Merrill Lynch anymore. I don't have a license anymore, or any of the other companies I've worked in the past. So I can't do a full-on price target, whatnot, and tell people what to buy, what not to buy, nothing of that nature. That's not what we do. We just make a drill sheet, which is a model, a structured framework, 10 factors. It's an institutional style model. It's strict. It doesn't change. It doesn't vary. We do have more of a public brief or a retail facing version, which is not as in depth. The institutional one is exceptionally in depth. It can go 10, 15 pages, depending on how much knowledge you want, you're excited about or curious about. And that allows us to as well work with a wide range of people out there, with companies to look at, present their opportunity and frame it to them in the framework of the drill sheet, as well as retail investors that are new to the space who think, oh my goodness, I don't need a 10-page report talking about the geology, the management, assays and continuity. I just need to know a few things Andrew, hopefully over time we can learn with you, and what are the catalysts? What do we need to look for? That's a place to start. And that's what we want to be here for, people, is to present the opportunity, especially to those that understand that extraction is the way of the future. Doing it properly and cleanly is also part of the future. And to look at places in the world where that is possible, even remotely possible. And that requires, once again, a disciplined framework. And if you're going to cover 5, 10, 15 juniors plus some majors that are actually producing, it's a lot of work. It's a lot of work for me. And I mean, I love doing this. I love doing the research and keeping up to speed on all of these new assays that come out, say from Mining Hub, and you see some company I've never heard of get great assays. And I think, oh my goodness, run a drill sheet on it. That takes me a lot of time in a day. If you don't have the luxury that I have of being able to talk to CEOs, do this all day, read and research all day, it's very, very challenging. And that's why we wanted to make this, that it was something that was accessible to everyone. It's not promotional. In fact, it's very critical. The biggest complaint we get from companies is that they think their score is too low. And once again, I'd rather be more critical, a little bit more boring, and less, I guess, liked because it is critical, because we're trying to make sure that people understand that this is speculative risk, it's venture risk, it's a risky business. And especially if we're trying to attract new people who are excited about the opportunity that metals, copper, electric wiring, nuclear, the entire future of robotics and AI, if they're excited about that and are putting together that, yes, we need these metals, then we need to do it a little bit more boring, because the foundation that we're building everything on, I mean, those aspirational stories are exciting enough. We need that foundation to be as boring as possible. So if we can deliver a framework like the drill sheet, where it's a model that's just strict, it doesn't change, and it helps to keep you on track, to just look and go, oh my goodness, it's been 3 months. Has the score changed on this drill sheet? Did they meet catalysts? Where is it at? And that's what we were building. And it is, once again, being able to cut through a lot of the promotional talk. And there's nothing wrong with it. People want to get people involved in this market, and there's no harm in that. It's just, it's very important for people to understand that beyond that, yes, there's lifestyle companies. There's lots of people who are just very interested in the treasure hunting of geology and interesting rocks, and they mean it. They would say, yes, what we're seeing is absolutely fantastic. These rocks are incredible. The formation, it's very interesting. That doesn't mean there's an economic case for that deposit. It doesn't mean that there's continuity. It doesn't mean that the assays are proving up the thesis that the company has. And it doesn't mean someone's being dishonest. It just means that people view the different parts of their jobs in different ways and can be fascinated by it. And we need to decipher all of that. And this drill sheet, this framework, this lens that we put onto it will be evolving and getting better. So, I mean, the 10 strict institutional framework remains the same. But if we can make it tighter and better, we're going to. We can make it a little bit more critical, I'm going to. And we want you to be part of that. We're here to provide clarity, to look at the narrative and look at the story, to help people wipe away the 80% of the companies that aren't in a strong position. And if you are really still excited because the catalyst for, say, a lower scoring drill sheet company, the catalyst is material and significant, and you think, you know what, it's 3 weeks away, their assays are coming out, and we think this is going to be a game changer, at least you know what you've got. That's it. We've identified the risk. We've let you know, yes, there's catalysts coming. This is risky, but if they hit, this proves the thesis. This is, expands the deposit, whatever it happens to be. That's what this provides. And once again, there's all sorts of people who want all sorts of risk. And as long as people understand the risk that they're taking on, and of course, as we know, more risk, more potential upside, that's what we're here for, to provide that clarity. It doesn't mean we're going to be right all the time. It doesn't mean the model is going to be right all the time. It doesn't mean it's prognosticating that the drill is going to do well and they're going to hit. It can't do that. What it can do, though, is keep the entire narrative tight, compact, so you can check to see if they're moving along. And then as soon as news comes out, whether it's 3D modeling, whether it's soil samples, whatever it is, we know, is it moving the needle? So we want you to join in, send us information, talk to us, engage with us. We look forward to building this. We see volatility is going to be there. There's no doubt. But there is nothing in the macro or fundamental outlook that's changing any of the thesis that we have regarding mining in general, the critical need for any of these materials and metals moving forward. And we want you to be part of our team where we're growing together. Thanks so much, everyone. Have a great weekend. We'll talk to you soon.